Happy Monday, everybody. Hope you had a great weekend. Was a long weekend for me. There was just too much time to sit around and do stuff. Had a great weekend, though. Got a lot done. It was wife's birthday, so we had a nice dinner with the family and everything. And now we're back to the markets. Don't forget, this Saturday, we're doing our live budgeting class. If you're joining us, you'll get a link ahead of time for that class. We're going to cover the big ticket items. I've just put so much into this. I mean, I want to give you the specifics. I want everyone to be able to take 60 to 62% of their budget and be able to know exactly how to budget for that without spending hours on it. I want this to be real quick. I want you to know exactly what you should spend, because if you can get 60 to 62% of your budget right, then there's nothing that can take you down, right? You can't become financially ruined by eating out at Chipotle every day. It won't be possible, because we'll have 60 to 62% of your budget straight once and for all. So be sure to join us for that. If you're one of our customers, we'll get you the link just before. If you're going to join us on a class, go to the website. It's up at the top there. You can check it out. We will definitely love to have you. Okay, so as far as the markets today, I want to take a different approach. First of all, the stock market was higher today by quite a bit. It was a great day all around, and it held all day. You had the Dow higher by 177 thanks to Apple being at new highs there. The S&P added 12. Nasdaq was higher by 52. Apple was really the reason. We'll get into some other stuff too, like retail, that certainly helped out the overall strength of the market. But a lot of the focus today was on Apple. Sort of a slow news day in general, but I do have some concerns. Let's go to the charts here. You've got the Dow on the screen. We know the Dow's lagging behind. The strongest index right now in the market's the Russell 2000. Second strongest is the Nasdaq. Third strongest S&P, and way in the background is the Dow. If we go through the stocks in the Dow, there's some real concern there. There's a lot of stocks that just aren't keeping up. If we go through, I'll just fly through the charts real quick. Goldman Sachs, you can see on the charts, suffering. United Technologies, little recovery, but basically suffering here. Pfizer, not doing anything. Travelers Insurance, Travelers companies, not doing anything. Verizon, not doing anything. Cisco, holding at the highs. Intel, looking pretty good there. Caterpillar, not so bad. CVX, it had a brief moment. ExxonMobil now with the price of oil struggling. GE is all but gone. Just count that one out of the Dow altogether. And as you go through these stocks, you could start to really see there's a lot of them. IBM not participating. Microsoft doing well. We'll talk about that in a minute. McDonald's not playing along. Apple, of course, doing well. Coca-Cola not doing well. Disney not doing well. Procter & Gamble not doing well. You get the idea, right? I don't have to go through all of them. So when you see the market up today, you go, okay, what's the deal here? And that was kind of concerning all day. So did a little research. If you look through the month of May and you were to look at the performance of the S&P 500, we can break that down. We could sort of disconnect it little by little, pull the pieces apart and figure out. The S&P 500, I believe, was 3.6% was the gain for May on the S&P 500. 1/4 of that was only because of Apple. So Apple was responsible for 1/4 of the entire gains for the S&P 500 in May. That's not a good sign. It's just like when you invest in something, you want to diversify, right? You don't want to invest in only one or two stocks. It's just like that with the market. We don't want to see that one or two stocks are pushing the market higher, because what if that one or two stocks tends to take a break or decides to take a break for a while? That could really suffer or hold back the market. So I'm a little like, I don't know. I don't believe this market so much today, and over the past couple days, a little concern there. But nonetheless, that's not my opinion. We will adjust as things happen. We've got Microsoft today in the news. They bought GitHub. I'm not familiar with GitHub, but I did look at it a little bit today. Microsoft, one of those stocks, that's really one of the only stocks holding up the Dow, hitting new highs here, holding up the Nasdaq, helping out everything all together. Is just these one or two stocks. They bought GitHub for $7.3 billion. There's a lot of concern there about the users of that product, by the way. They don't like that idea that Microsoft bought that. But shares of Microsoft now higher by about 20% on the year so far. Retail was one of those sectors, didn't get a lot of attention today. XRT is one popular retail ETF. That was higher by just over 2.25% today. Man, there was news everywhere. And you know what? Let's do this real quick. Because a lot of the retail stocks actually did really well today. I made a note. Let's see how we finished here. So Under Armour was the big mover of the day. If I could pop over there to that chart. Great move on Under Armour. That basically just got an upgrade today. But as you go through the list, so Under Armour almost 7% gains. Target 5%. Kohl's 5%. Ulta Salons just about 5%, and an incredible rally there. If you're a technical trader, you love that one. Macy's 4 1/3%. Limited brands, that's one that's been suffering. That's Victoria's Secret, 3.5%. Ross Stores 3%. Walmart 2%. Whirlpool 2%. TJ Maxx 2%. And as I go down this list, there are 1, 2, 3, 4, 5. We'll count CarMax in the mix too. 6, 7, 8, 9, 10 with Dollar General, and that's it. 10 more names that gained over 2% in the retail sector. So that's pretty impressive. I think that's where you get excited. You know, great that Apple had a good day, but that's pretty impressive there for retail. So strong recovery there. A lot of that spillover from the jobs report on Friday. People are pretty happy and optimistic, I guess, because everybody has a job and they are willing to go spend money. One thing that's helping the consumer but hurting the investor at the moment is oil. Oil broke through that trend line that so many people look at. This uptrend here in the short term is now broken. People will be looking for the next area to buy. Really, the technical traders are going to be hoping for an all-out collapse here, some panic in the next few days to a week to pull it down to the 200-day moving average, which would be around $60 per barrel. I'm sorry, $60 for the futures here. So that was down about 1.5% today. And really the only reason this was lower today, when the support breaks, it's just people saying, okay, I'm out. I either have a profit or someone bought and they have a loss and they've decided that's as much as they want to take. It's a smart area to take a profit or a loss. That's all you see there. I don't think there's any real news going on there. But because of that, you had a lot of the oil stocks down today. Halliburton, actually Schlumberger came back. If we look at the sector as a whole, the oil and gas explorers were down just over 2% on the day. I don't think it's a real big deal. I don't mind that oil was down today. I think it was just a technical profit taking. I'm sure if you saw it on TV, that's probably what they'd even be talking about there. Also in the news, the meal kit companies, Blue Apron, HelloFresh, were the two that were real popular. Here's Blue Apron on the screen. It's like 4 days straight of gains, up 5% going into, or as it closes here. I don't know. I don't think it's one of those turnaround plays. I think it maybe gets bought out if anybody's willing to suck it all up. The problem with me on these things is you got Blue Apron, which sends you the food. You still have to cook it. We're lazy. I use a meal company. I use two of them, actually. I use Icon Meals and Bite Meals. They send me the food ready to go. It's flash frozen. It's amazing. It tastes great. I'm not like selling for them or anything. But the point is, I don't have to cook the food. I don't have to chop all the ingredients they send. I just literally heat it up and I'm ready to go. Not only that, they're good for you. You can order them custom calories, proteins, whatever you want. So as long as those people are around, I just don't see how a company that's still just going to send you the ingredients and then you have to cook the food. I think we're lazy. I think we all want to just heat the food up and go. If it can still be healthy and not filled with sodium, then even better. So that's what I do. Okay, look, as the week goes on here, we're going to start losing that high, that excitement from the jobs numbers that came out on Friday. I think the focus is going to go back to Washington, the trade wars. There'll be more comments about that. We are not done with that sort of mess for the moment, so be ready for that. Other than that, we will wrap it up there. Keep it short. Enjoy. Have a great Monday. Great start to the week. We've got a lot of good things coming up this week. Tomorrow, our live class on ETFs. If you want to join us for that, going to go over all the things you need to know about ETFs if you're considering them or if you have them in your portfolio. Just wonder what in the world are those things. So we'll talk to you then.